Hi everybody, this is Osprey from mychartcoach.com, and in this video we're going to take a look at some of the small caps that were in play today. Okay, so first up is ticker symbol VTVT. Really nice follow through today, closed up 85%, so congrats to everybody that caught yesterday's video. Super nice move. It did break above 30 on RSI, Fasto's heating up. You've got minus DI crossing over 80X here on 80X there, and so basically this has been filling the gap. So yesterday there was a close above the bottom of the gap level. There's a gap between low of day on the 9th and high of day on the 10th. And so yesterday's close above this bottom of the gap level and above the EMA 4 was signaling more upside potential. And so there was nice follow through today with the close above EMA 8 at 168 and above the EMA 13 currently at 215. That's the key level to hold. If it can stay above 215, then the next levels to break are the middle Bollinger Band and the top of the gap. So as you can see, the upper wick on today's candle did not quite get to the top of the gap level, so the gap is still not filled. So tomorrow look for a potential gap fill, and then many times a gap fill will be a climax event. So following this multi-day run, hitting that middle Bollinger Band and failing to break could signal a temporary top. Now if there's a close above 325 or it breaks above, then you have the 50, 100, 200, and 300 days simple moving averages all converge between this $5 and this $5 550 zone, and so that would be the next target. Now if it struggles tomorrow with 215 and it drops below that level, that would be a red flag. And then if it dropped back below EMA 4 at 153, it would no longer be in play. Okay, so it's a risk to, anything's a risk to hold that's forming candles below EMA 4 on the daily chart if you're long. Okay, here on the 15-minute chart, you can see the nice move yesterday, and then it pulled back into the close, and we were looking for a break above this red line, which was the 200 simple moving average. It broke above that level, and then it got above the blue line, which is the 300 simple moving average. It was holding that level into the close, so that's been providing support, and so that's going to be the big level to hold tomorrow. And so if there's a drop below 206, that would be a red flag, okay, because that's been holding the whole day, that this is the bottom of this support level. And so as you can see, basically if it drops below that, then the downside risk is it could drop down to the 50 simple moving average at 166. Now to the upside, if it breaks that middle Bollinger Band at 226, that would signal upside potential, and then you'd be looking for a run back up here to 250, the high close up here from today, and it has to bust through that 250 resistance zone to head to the next level. Okay, let's take a look at SDRL, ticker symbol SDRL. So this had a really nice move today. It closed up 65%. So yeah, it had that gap up open, and then it's formed the black candle at the beginning of the day, and then it ended up reversing and taking off. So that was a nice move. Look at the parabolic spike on ADX. So here with plus DI shooting straight up like that's an unsustainable move. So keep in mind, that SDRL cannot sustain that type of trajectory for an extended period of time. But this is the first day after this push here, so we'll see what happens. It did close today above the 200-day simple moving average. This is the red line, and above the upper Bollinger Band at 30. If it does pull back into the bands, because it did close well above the upper Bollinger Band, then you'd want to see this 200-day simple moving average 29 support level hold. If it dropped below that, that would be a red flag, and then you'd have the 50 and 100-day simple moving averages down here between 24 and 26 back on deck. Now, if it can bust through, you can see it's hitting this 88, to 42 resistance zone, and so that's resistance from back here in November. You could check out the two closes here in November that need to break. The upper wick hit right at that level at the November 7th closing price, and so if it can bust above that, then you have the 88 close from back here in September the 20th, which is the top of this white candle, and if it could break above that, then you're looking at the 300-day simple moving average at 52. Okay, so the 300-day simple moving average is the next target if it can bust through this resistance zone, if it can get through these three red lines. That's the big level. It's always the big level to break that 300-day simple moving average and turn it into support. If it did close above, that would continue the run. Now keep in mind, SDRL has a habit of pulling back, after big moves, but as you can see here on these previous spikes, they were 3-day runs. So maybe this could string together a multi-day run. We'll see tomorrow. there was a little bit of a pullback for the XLE into the close, so we'll see how that plays out tomorrow. But oil has been bullish, and we'll see if that can continue, or if they're going to start locking in some profits up here. We'll see. We have to keep an eye out for that. You have to be careful chasing. Okay, let's look at SAEX. This closed up 29%. Now, yeah, we put out alerts on this. It didn't have much volume. It only traded 265,000 shares today, but it ended up following through. You know, I recommend coming into the premium chat. I put out charts and TA on these plays today during the trading day, and so yeah, you can go onto the Osprey board, and I repost all my posts there, and so you could screen back and you could find technical analysis on these stocks from earlier in the trading day. And so yeah, if you come into the chat and you've checked it out for the first time, I apologize if I didn't give you the link for the premium channels and for the premium chat. And so if you come in there, you know, I'm just going to give you the free trial automatically from now on, and then you know, that will expire after a 24 or 48 hour type of thing. And so I'll give you a chance to check it out. And so if you've checked out the chat before but you weren't able to check out premium, please come back and I'll give you a chance to check that out. Okay, thank you. Yeah, so here for SAEX, and the reason why I'm seeing this is because I put out alerts on this in the chat today, and it had only had like 100,000 shares, and you know, when we were checking it out, it was breaking above this middle Bollinger Band and got above the 50-day simple moving average at 154, and so we were looking for a close above that level. Anytime we have a stock that's like this, that's trading below the middle Bollinger Band and then gets above, it gets on our radar, and then it has to get above that, you know, and then if it gets above that next key level, which is the 50-day simple moving average, then that's really getting on our radar, because that's the next, you know, key level. Once they're above the middle Bollinger Band, the 50-day simple moving average, that's when they can really get moving. And so you can see volume picked up into the close. It stopped right before that next key level at the 100-day simple moving average at 178. If it can break above that level tomorrow, we're looking for a run up to $2 up there at that 200-day simple moving average. You can see here, you know, it's going to have to bust through some resistance here. What happened is it's back in this channel. You can see in February there's this sideways channel, and so now it's back in the middle of it, and so the top of it's at 190. You know, if it can break 178, 190, then that 200-day simple moving average will be on deck. Notice there was a spike in volume today. What happens many times is, you know, the volume will start off light, and then it'll pick up, like back here in December and January when there was bigger volume, and so that's what needs to happen here. Is you want to see an increase in volume and then a push through resistance. Now, if it stalls out at 178 and the candles work back into the band since it closed above the upper Bollinger Band, what needs to hold is that 50-day simple moving average. It has to stay above that level now. If it drops back below, it will no longer be a good play. It's only a good play now if it stays above the 50-day simple moving average and middle Bollinger Band. Now that said, if it did drop below the 50 simple moving average and then it hit the middle Bollinger Band at 136 and that held, then that would be the reload level. But you know, it's all about now breaking these moving averages. What's going on is there's stocks like you know, that we've posted in other videos like LG, CY, and I mean, there's been a bunch of them that just kept running, you know, and they've had this nice multi-week type run, and so there's a lot of the laggards are catching up, and then you have stocks like MCEP here, which it's been on a nice run. You can see it's strung together a nice push above the moving averages. It came down here and hit the 200-day simple moving average. It got above the 50 or the 100-day simple moving average in the middle Bollinger Band, and then it got above today the big move was above the 50 and 300-day simple moving averages. Those are currently basically at 160, 157, and 160, and so the break above both those levels was really bullish. Also notice it broke the descending resistance line in this downtrending channel, and so it's trying to bust out of the top of the channel. It did bust through that upper Bollinger Band, so you know, the candles could work back into the bands. If they did, it would be best if it turned this descending resistance line into support. So you want to see it stay above 175, and then you definitely want to see it stay above, you know, that 350-day simple moving averages, you know, stay above 160, and then you really want the candles to keep riding EMA4 at 165. Now to the upside, 190 is the next big level to break. If it can break that, the high close is right here, that just above 195, you know, 196 or so. You can see all these candles here where the closing price is this white candle, and that's the key level to close above. If you see a close above that level, that's going to signal that it wants to head higher, and you can see it back up in the twos. Notice down here it had the the volume spike. So it was the largest volume day since back here when it had a run in January. So yeah, so keep an eye on MCEP. Another one to check out is that's breaking out, and we kept putting alerts on, and this is what I'm talking about, and that's why some of these laggards are starting to follow. Check out WTI, closed up 14%. DNR is another one. You can see here this is on a big breakout. That's what happens. I mean, this has had really good volume, and that was your clue that this was one of the better penny stocks because it had the solid volume the entire time. And so it came down here and hit this 100-day simple moving average and held, and then now it retraced all the way back up, and it closed yesterday right at the January resistance level, this 520 level, and just below 520, 519 or so. And so today it was either gonna form a temporary top at this level and maybe go sideways or pull back, or it was going to break out above. And today there was a really strong breakout above that level. And so what you want to see now is you want to see the share price stay above 520, keep riding EMA 4 at 533, and then now we're going to have to look at the weekly chart to find the next key resistance levels. And notice there was a huge volume spike today. If you look here at the WTI weekly chart, you can see how it came down here and it's been in this upward channel. All right, and so basically the last what was it last week? It got above the 200-week moving average. That's the red line at 430, and that was signaling more upside potential. And now this week it's trying to bust through the upper Bollinger Band, and it's hitting the top of the channel, the multi-month channel here. And so is it going to bust through the top of the channel and break out to the next resistance level, which the next moving average is the 300-week moving average at 794. That'll be the eventual target if this uptrend continues. Now it might not be able to bust through 6 here. You can see if you look back here in 2015. Okay, so this was resistance here that it's hitting in 2015. If it can bust through that, then you have this resistance level here at about 675. So the 675 are two big levels. Break those, and it could run up there to that $7.50 to $8 level. Okay, so yeah, the really nice uptrend though. Okay, look, check out EPE. This is another one. It's been heating up. It closed up 20%. You can see down here it's on a multi-day run. This is one that we put out alerts on last week, and then we've given out some alerts on it as it's been heating up, and it just kept following through. You can see how it was quietly just breaking above the middle Bollinger Band there, and then today it was the big move above the 50-day simple moving average, and so it closed right at the next key resistance level is the 100-day simple moving average at 186. And so if it can bust through that level, then we'll be talking about a possible run up here to the 200-day simple moving average. It even looks like there's an unfilled gap up here. Look at this micro gap. And so that could be a target up there at 220. So it's hitting resistance right now. You can see it's hitting this, you've got the resistance from the previous closes. And so this is going to be a really big level to break. And so going forward, if EPE can break above 190, it could head up to this 220 level and fill this gap. All right. But if it struggles with 190 and you see it drop, trading below 186, it could pull back, especially since it's on this, 7-day run. And so you have to be on the lookout for a red candle. Today's candle is busting through that upper Bollinger Band. This might be the level where it takes a breather since this was big resistance in February and again in March. This might signal the temporary top. And if that happens, look for a reload off this 50-day simple moving average if support holds. Okay, let's take a look at TRX. All right, so this is mixing it up a little bit. This is a gold miner stock here, and you can see it closed up 7%. I want to show you this because it's had this strong uptrend. It got above all. It came down here and hit the 100-day simple moving average, and then it's worked its way above the 250-day simple moving averages. And then last week it got above the blue line, which is the 300-day simple moving average. And so and it broke out above the high close resistance, which was another key catalyst to signal that it was heading higher. This closing price right here in January was a really big level to break. And so basically, this move, this candle right here was a big candle. It got above the 300-day simple moving average and above high close horizontal resistance, and so that was signaling more upside potential, and it's been pushing higher ever since. Notice how it's riding EMA 4 support. It's closing right here, or it's right now at the closing price on the 16th of April. It closed right at that level. So if it can bust above 53, 56 will be the next key level to break. Now to the downside, if you see if you notice, it's been riding this pink line for the last couple of weeks here. If it drops below 50, that would be your signal. Okay, it's cooling down, and that's when it could pull back and test this EMA 8 or lower. As long as the EMA 4 is holding, it's signaling more upside potential. Now, if you look here at the weekly chart, each candle represents 1 week of trading. You can see here it busted above this middle Bollinger Band back here at the beginning of the year, and then last week it got above the green line, which is the 50-week moving average, and that was signaling more upside potential. And this week it's trying to break the 100-week moving average, which is currently at 52, and so it needs to turn that level into support to head higher. Now, currently at 53, there's a doji forming. There's still several days. We still have Thursday. We have a couple more days in the week, and so there's this candle is going to change. But if a doji did form the end of the week, that would be a red flag. That would could form bearish doji star reversal pattern. And so basically going forward, you want to see it stay above 52. If it dropped below 52, the candles could work back into the bands and test that EMA 4 at 46. Now, if it can stay above 52, then you're looking for a move up to the 200-week or to the 200-week moving average at 63. It needs to bust through this. What is this? April 2017 resistance. That's the level that it's hitting right now at 54, and then you've got this 57 level from back here in January of 2017. That's going to be the big level to break. Okay, let's take a look again at some another energy sector stock. This is I should have had the gold at the end. Here's REXX. You can see here it only had 300,000 shares today. It closed up nearly 18%. So the chart's heating up. Yesterday it had a slight close above EMA 4, and then now today it closed above EMAs 4 and 8. If it can close above EMA 13 tomorrow, that's currently at 68. If it breaks above that level, then the middle Bollinger Band at 77 is going to be the next key level to break. That'll be the next target. And if it can get above 77, then you're looking at the 50-day simple moving average at 91. That'll be the next target. So fail to break 68, that would signal temporary top. If it dropped below EMA 4 at 61, it would be a risk to hold. It's only going to be a good play if it stays above 61 and breaks above 68. So keep an eye on REXX. It did have volume down here last week, so it looks like there was some loading, so they might try to push this thing higher. Keep an eye on it. And then yeah, take a look at CEI. Okay, it closed up nearly 12%. This is another one of those bottom bouncer type plays. Okay, so it's been in this nasty downtrend. It had a big volume spike today. Now it had one back here in March, and it did nothing. It just they kept selling shares. But if you see, if you watch it and see it break above 71, that's the middle Bollinger Band. That'll be your signal that it's really heating up, and so you want to see that level turn into support. Now back here in February, it closed above the middle Bollinger Band a couple times, and it failed to hold and pulled back. So it has to turn that level into support to finally get a new uptrend going. This big volume makes it interesting down here where it could possibly get going, but you really only want to trade this thing if it gets above the middle Bollinger Band. Otherwise, it could be you could get stuck waiting. You could see here it was in this tight channel. I mean, all the closes are within this channel here, and it closed today above the top of the channel, above EMAs 4 and 8. That's the clue that it's heating up. Now it just has to get above EMA 13 at 67, and then above the middle Bollinger Band there at 71, and maybe it could get moving. So keep an eye on that one. And then another one to keep an eye on is ticker symbol PQ. It only closed up 2% today. It was trying to close above EMA 8 today, and it pulled back right at the close. That's currently at 53. It did close above EMA 4 at 52, and so that's the first close above that level since back here in April. And so back here at the beginning of April, that was the first close after since back here in March. And so it's been working on turning EMA 4 into support. Once again, it has a similar pattern here to CEI where it's down here at the bottom, and it's it's got this channel going. you know, where multiple candles are, you know, all these candles have closed inside of this tight trading range. And so if it busts through 53 and closes above, that should be the signal that it wants to head higher. And then you could see it hit the next key level to break. It's the EMA 13 at 58. If it gets above that level, then it could possibly run up here to the middle Bollinger Band at 64. There hasn't been a close above middle Bollinger Band since back here in January, way up here. And so, you know, it tried to get above in March and failed. And so that would be a bullish change in trend. You know, what makes it interesting again is this volume spike here, and you know, the volume here. You know, you got the volume down here, and that's what you want to see at the bottom. It's traded in a tight range with some volume spikes. Many times that's the load before they push it higher. So we'll see if it can get moving. Okay, let's take a look at IZEA. Okay, it closed up 44% today. Yeah, I wanted to show you this one because this is one of those ones where they walked it up on really light volume. Check out how it had hardly any volume last week, but they were creeping it higher. It got above EMA 8 or EMA 4 on Monday, and that was the clue that it was heating up. Notice that that was the first close above that level since back here before the drop. And so that's why we look for closes above to be our signal that the chart's heating up. And then, you know, yesterday it had a little pause candle, and then today, boom, the big follow through. What happened today, though, it came up here and hit the 100-day simple moving average. Notice it's also resistance from over here. This is a resistance zone. And so it got into this resistance area, this previous channel. It hit that 100-day simple moving average and pulled back. Unfortunately for the bulls, it also pulled below EMA or the 50, 200, and 300-day simple moving averages. You have the 50, 100, 200, and 300-day simple moving averages all in this same zone, and the share price, you know, broke above these three and hit this one and pulled back and ended up closing below all four. So that was not a good close. You know, you want to see a close above those levels, especially with a stock that's thinly traded like this. You know, there's been no volume, and then all of a sudden huge volume today, and then the pullback, which signals, you know, they were diluting into the run. And so going forward, if it can stay above 288, it will remain in play. If it drops below 288, that's going to make it a risk to hold. It has to stay above the middle Bollinger Band. Now to head higher, though, it needs to get above these levels. So if it can get above 353, that would be bullish. If it fails to break these levels, that would be a red flag. It just, you know, it would have been a better play if it could close above that 100-day simple moving average, and maybe it'll do that tomorrow. If it can get above the 100-day simple moving average and then close above this resistance zone here and get above 450, then it could really get moving. Okay, so just wanted to show you that one. And then finally, let's take a look at RAS. So yeah, if you look here, it closed up 12% today. And so it did close above the middle Bollinger Band. You know, this is the, you know, it closed above the middle Bollinger Band back here on the 9th, and it failed to hold, and it pulled back. And so maybe it could get a bullish change in trend this time. It has to stay above the middle Bollinger Band, above 20, to remain in play. If it drops below that level and drops below EMA 4 at 19, that would be a red flag. If it can stay above the middle Bollinger Band, then you're looking for a retrace back up here to this close, just below 26, and then you have the 100 or the 50-day simple moving average at 27. So you'd be looking for a run up here to this 26, 27 level if it can stay above 20. Okay, so keep an eye on this one. If you look at the, you know, and what makes it interesting is the volume. You know, it has good volume down here. You know, so there's been, you know, this has a lot of volume, and so you know, had the spike, they pulled it back, and now it has another spike, but it has to, you know, stay above that middle Bollinger Band. If it drops below 19, it will no longer be in play. And then if you look here on the 15-minute chart, it did get above the moving averages, so volume came in today and it pushed it up higher, and then it was able to close above all the moving averages on the chart. You have the 100, the 50, the 300, and the 200 simple moving averages. And then you have EMAs 4, 8, and 13, and the middle Bollinger Band, which is the 20 simple moving average. It closed above all those levels today. So that, I mean, you know, that's super bullish. If it can stay above this 20 level, that will signal it wants to head higher. If it drops below 20, that would be a red flag and signal that it's consolidating. To the upside, what you want to see now is a break above this high close. Basically get above 208, and then that's going to be a clue that it wants to break out higher. So yeah, so keep an eye on RAS. All right, thank you very much for viewing this video. Please come check out our chat. I'll post the link below the YouTube video. Thank you.